In today's Bitcoin video, we will have a deep dive into everything that is going on, starting with the structure, looking at possible retracement zones and target zones, which could go very deep. We will also be looking at some more intricate data, as well as the liquidation heat map and some more data on where we are in the cycle and what could happen just over the next few days. Now, let us start with this. And this is the structure we've been outlining these past videos as well. I want to today highlight a more, well, not important. This is our secondary scenario, which I haven't shown in the past videos because, well, primarily I did not think it was that relevant because we were just, well, very bullish adjusting it now. This is also still possible. I just want you to keep this in mind. And of course, this is not financial advice, it's just our opinion, but it is entirely possible that we hit this green zone, which would probably look something like, well, this would then be the A wave, a B wave, and a C wave, something like this. So actually, if we do see a turnaround in this support box here, then somewhere we will have a new target zone where we can decide whether we turn around and go higher or we turn around and go low. We will communicate that when the time comes, but we have to be sort of cautious that we don't slip into this scenario because this is very bearish. And just to remind you, this is some price targets that we've communicated. Our super cycle wave, well, basically our first target for the super cycle, so for the entire bull cycle, has been hit. In theory, seeing a bear market now would be possible considering our structure. Do we think it's likely? No, not at all. We think it's quite unlikely actually. But just keep in mind that this is something that can just happen. Now, looking at the more immediate structure, we've communicated in the past videos that we think that we have topped in a wave 3 here on the 17th of December and have since gone down, let me just draw this on the chart, gone down an A wave. And we'll now be seeing a B wave, which we might be seeing here in an A, B, and a C wave pattern. And from here, if we have hit this, we will go down in a further C wave, going somewhere into the support box. Now, is it possible that we have actually seen a bottom already, and this was the bottom, and it was maybe like an A, B, C? Yes, it is possible that this is a wave 1, a wave 2, 3, 4, 5 setup, and then we go higher from here. We think something like this similar is possibly playing out for Ethereum right now. We're a bit more bullish in Ethereum. We communicate our exact analysis with our members for that if you're interested. But for Bitcoin, I'm not quite so bullish. I will show you some more intricate data. I think I've been saying that word more than once in this video in a second on why exactly I don't really think that is necessarily the case. But just on account, I really just think that we need a bigger correction. And so far, we are top to bottom 15%. Now, going back to what is possible in a bull market, something like 20% is not unheard of, as we've been communicating, and that would be the mid-80s. Structurally, I would see one more low, just in terms of how big the correction is in percentage. Of course, that is, it's a very simple way of thinking, but often when trading, the simple things are the things that work best. And because also many people are looking at the simple things because, well, they're simple, and what many people are looking at is what is probably going to happen. And I think the retracement is just not deep enough. And also, what is very important, if we have bottomed, what we would be seeing here right now would be a 1, 2, and then a 3 wave. Now, I can only give accurate and always on time updates to my members. I can't really do this on YouTube realistically because you can't upload videos that fast and can't make them that fast. But what I would be watching here, or well, I'm just going to tell what I will be watching out for here so you know what I am going to be doing, so you can watch it out for yourself maybe. And of course, not financial advice, just our or my opinion. I'm going to watch for a impulsive breakout because if it is a 1, 2, and here 3 of pattern, it will probably be an impulsive wave to the upside. And if we see that, I will watch if it breaks this red support zone. So if it breaks above 104.7k and holds above this level, then I think we're in an impulsive structure once again, and that then I'm going to be more bullish. Otherwise, I'm watching for a turnaround in this box, and then I'm watching that we catch support somewhere here. Where exactly, it is hard to determine yet. I think somewhere around this middle level, 86, but I don't think this top one is accurate. I think it's between those two. Basically, to draw it on the chart, somewhere in this circle is where I'm going to be watching for a turnaround, watching for confirmation, and then we'll probably see another 1, 2, 3, 4, 5 pattern to the upside, which, to just say this, might be our last one in this cycle, because we have extended, do not forget this, we've extended almost 600% from the bottom to the top in this bull market. This is quite a lot. We haven't only rallied a bit. We are in the ending stages of the bull market. And a lot of people are saying, no, it's going so much further. It's not necessarily going so much further. And here you can see, this is our second target for the bull market. For, well, considering our wave count, it is quite a long way to go. From current prices, it is 48%. From the top of the price, it is 30%. But some people are so bullish, and this is basically just a 30% increase. Of course, 30% is a lot, but some people are so bullish, they're calling for 250K, and I think it's just unreasonable. I think we're not going that high. And one of the markers for the end of a bull market is that many people are screaming it is going so much higher. So be aware of that. When people are saying prices are going so much higher, when people are euphoric, that is exactly when things are about to go bust. Looking at the second point, the data behind the price, what we can see is that, of course, over the weekend, this has been slowing down. We've seen basically, well, nothing happening to price. Also, nothing happening to open interest. I think it is actually insane how little change there has been in open interest. Even if I flip this up high, there has been, well, I mean, we can just measure it top to bottom, 2% change in open interest. It's basically nothing. That is actually very crazy how calm the market is right now. And also spot volume, measuring bottom to top, well, that's not really fair. Let's go somewhere here. Well, that's not really fair either, but you get the point. It's 5%, it's less than 10%. This is not significant. Also open interest, funding, sorry, is hovering at around basically, well, zero. It's basically zero. If it would, yeah, well, there is no line on the chart currently. I can't really get it to where zero would be. But this is my line currently. The cursor is basically zero. And you can see it's so close to that. And just remember, there has been times where it has been like 0.01 or something like this. Or 0.1 actually happened as well, I think. Possibly. Not quite sure on that. But this is very, very low. And how healthy do I think this is? Well, quite so, because this means that there is no crazy open interest happening. There is no crazy funding happening. So what I'm going to be watching out here for is whether we see any crazy spikes in open interest, whether to the up or to the downside, and whether we see anything with funding, up, down, whatever. That's what I'm going to be watching for, and that's what I'm going to be basing my decisions off of. If you want a interpretation of what is happening, if one of those factors is moving, feel free to check out our website. It's the first thing in the description. We explain all of that for our members in detail. Now, going on to the next thing, the liquidation heat map. I've been using this less and less in the past time because, well, if you know what a liquidation heat map is exactly, if you read it, what exactly it is basically just an educated guess. It is somewhat accurate. It is actually pretty accurate, but this is not real data. These people, I'm on the CoinGlass liquidation heat map right now, they don't actually know for sure if there is 118 million here. They don't know that. They can't know that. Only exchanges know that, and the exchanges only know what it is for their exchange and not for every exchange. And so this chart is for, I can scroll up so you can see, this is for Binance. Only Binance knows how true this is or how not true this is. They don't know. This is just an educated guess. To be fair, the educated guess is quite good, but still take this with a little bit of salt, a grain of salt, that this might not be the most accurate thing that you've seen ever. And that's why I've been using it less and less. But for overall visualization, I think this is still a great tool. Let me zoom out more. I'm now on the 3-month time frame. And what we can see here, and remember the prices I've been saying, where I think the retracement might be going, somewhere between 86 and 80 is a realistic possibility for me. And now let's look. There's a huge liquidation cluster here at 90. And if we go down between 86 and 80, again, here's liquidity here, all of this. Of course, you can now also say Well, you have this green support box, which is a possibility between 71 and 61. Looking at the liquidation heat map, 71, 61, there is also a lot of liquidity. However, I think this is just so deep down that I think it's just less likely that we hit this. It's basically, the thesis is it is so incredibly low that I think we're not that bearish that we're going to hit it. But of course, if you remember early on in the year, many people were saying, well, we're never going to hit X price level or this or that for Solana, for Ethereum, for Bitcoin, for all of these coins. And people were feeling so safe with their positions and everything. And then we ended up hitting exactly that. And after that, we, well, basically skyrocketed. Of course, a bit of consolidation before that, and then we skyrocketed. But people didn't think these levels could be hit. So don't fall into that trap. There is nothing that is forbidding the price from going to even 61K. There's nothing holding it except people buying. But it can always happen that people just don't show up, buyers don't show up, and then we actually see something as deep as this. You have to keep it in mind also when trading. The possibilities are endless, and this is not a motivational quote. This is just the price could go to $100 tomorrow in theory. There's no law forbidding it from dipping this low. It's just unlikely because it is such a good asset. But in theory, we could see something like this, and then we get like really, really bad macro news, something happening, I don't want to say anything that could happen because they're all just black swan events, but I don't know, a bank collapse, for example, like a big financial crash for some reason, and then we see a huge dip. This could go here, and just remember, right now, many people who have a position that they have open maybe at 50K or their liquidation sits here, or let's just say 60K because this is actually a support region we have, they're going to be feeling so safe, and they're going to be like, well, this is never going to be hit in this unless we hit the bear market. There is nothing that's holding the price from hitting that. You have to be aware of that. If you do not gamble money that you can't lose, and do not strategize with the theory of, well, it's not going to go as low as that, because it can. There's nothing holding it back from that. You have to be aware of that being a possibility. Now, enough with that. The heat map also tells us a different thing, and that is that there isn't a lot of liquidity above. Of course, here at all-time high, and we can't see above that. Unfortunately, the heat map doesn't allow this. But there is not a lot of liquidity above, so it's not like I could make a case that we skyrocket immediately now because, well, look here. There was such a big liquidity cluster here that you could have just said, well, I mean, of course we're going to go up and collect it, and we did. But it's not that easy to make a case for this area because there just is simply not that much liquidity. And that's also what I'm going to be watching for. If we see a bigger pileup and more and more and more, and this will happen here of liquidity, basically more shorts being added to the market, we have a bigger reason to go up and to liquidate those shorts. Market makers are interested. And that, if you're interested on learning exactly why and how you can use this tool, we also explain that in our membership. Now, looking at some even more data, which is basically the bull market progress. And this is a chart which is made by Rect Capital here on Instagram. Well, not Instagram, Twitter. I don't know why I said Instagram. And he's basically analyzed all of the different cycles and their similarities. And what you can see is he thinks the bull market progress is only at 60%. This will speed up in the parabolic phase. Why do I mention that? Because we were basically about to enter the parabolic phase, and 60%, I think you shouldn't interpret this as we will have another like year of this. It might just be a few months. This progress can speed up. If we make a 30% gain now, this will speed up. I don't know what exactly, maybe 80%, I don't know. But it will rise significantly. Now, the thing is, why is this relevant? I think because it's good to showcase that in case his analysis is right, I don't know. He has been making quite some good calls. That's why I'm showing it to you. Sorry, I just want to get this off the chart here. I'll just quickly delete it. Why am I showing this to you? Well, because basically at this point, we have to make a decision. Do we think this is going to be the start of the bear market and we dip lower? Or do we think this is not the start of the bear market and we make one more high? We have to assess that because risk is quite high now. We are in the late stages of the cycle. We have made a 500% gain. We have made these huge gains. Now, it is really just simply not sure if we make some more highs. That's why we look at data like this, which is telling us, well, actually, there's a lot of room to run left in this cycle, and we can Of course, there's never safety. Of course, there's never certainty, but we can maybe with a bit of more peace of mind look at this and say, okay, this wave count has a good chance of being correct because simply it would make sense in the grand scheme of things. Excuse me. Looking at also one more interesting thing, and this is by Dan Crypto. I can't show it because it, well, maybe like this. Yeah, now you can see Dan Crypto also on Twitter. And this is basically the CME gap, has something to do with, well, how the market opens and closes over the weekend. This is for the immediate short term. Price tends to move to this point as highlighted by the magnet. So for the short term, and again, this is in line with our thesis, in the short term, we are looking, if we look at this, at a price increase somewhere. Well, here it is, 96K. Might be higher if we see high momentum. Looking at our scenario, what do we think? Well, we think we will see a price increase probably in a B wave, which will go 100K or maybe even higher. And after that, we will probably see a dip. That is some of the data, which is why I think that the current structure is valid. Now, let's look at, well, what else could be happening? Just the different scenario. I just want to highlight it once more because I think it's important. It's also maybe nice for you to know that, well, if you just watch this video and want to apply it to the chart that is on the chart whenever you're watching this, if you're watching this in 24 hours, this might look entirely different. The different scenario that we have also on the chart for Ethereum is that this was a wave 1, this is a wave 2, 3, 4, 5. How do we know this is actually playing out and not this B wave? One thing, structure. A B wave is a corrective wave, meaning it has an A, B, and a C wave. This 5 wave impulse, of course, has a 5 waves. So that is one way you can determine how, well, what scenario is playing out. That's one way. The other way is just simply looking at price. If price breaks above this and sustainably and sustains the price above 104.7K, then it is likely that we're in this 5 wave scenario. And of course, then we will see a 3 wave ABC correction, and then we will go even higher. I'm not too big of a fan of the scenario right now. Maybe if we consolidate longer here and some of the data changes that I'm watching as I've been outlining, maybe I would be a bigger fan of this, and maybe I will change my mind, and I will of course communicate this with our members. For now, I'm more looking at this B wave top and looking for a nice B wave and then another retracement in a C wave. Yeah, that is what I'm currently watching. If you're interested in learning trading, then feel free to check out our website. We offer a psychology-based trading course, analysis for Bitcoin and Ethereum, just like we have shown you in this video just now, a bit more in depth on parts, trading signals, showing you what exactly we do with our trades, trading strategy, and some more things. Here are the tiers. It's the first link in the description. If you're interested, check that out. I think with that is enough said. I will see you in the next video. Bye-bye.